Howdy, Jacob here. Today we're looking at Hooker Furnishings Corporation, ticker symbol HOFT. It's in the household durables industry. First things first, 271 million market cap, 243 million enterprise value, 3.61% yield, so just under the 4% that we're looking for. As for revenue, looks like pretty big jump from 2014 to just before COVID, and then pretty plateaued. COVID and after last 4 years, 611 million down to 583, relatively flat. Not a lot of net debt. That's pretty nice. 23 million in long-term debt, 64 million in capital leases. Have about 19 million in cash and cash equivalents. Let's look at their free cash flow. So rolling 12, looking like 72 million. 2023 didn't make any money, but then 12 million in 2022, 67 million in 2021, 36 million in 2020. Looks like that debt level is definitely not going to impede on their business at all. That looks to be about a year's worth of their 5 year average free cash flow, so nothing too concerning there. Looks like they bought back a little bit of shares with their excess cash flow. They pay out a dividend of about $10 million, and I would say that 5 year average is probably closer to the 25 $30 million range. So that's affordable. Let's look at. Looks like they've been uh, paying out a dividend for quite a while. In 2014, it was 40 cents, and now we're up to 92 cents. Looks like they've increased that pretty consistently from 2017 on. So if we go to start to make some assumptions here, with a payout of only $10 million, and it looks like they make acquisitions. I mean, if we're looking at the last 10 years, they made three. So about every couple years, they make an acquisition. That's relatively the amount of their excess free cash flow. And then otherwise, more recently, they've just been paying out a dividend and buying back some shares. So I would say that they can afford this dividend enough to where I'll bump it up 4% a year for the next 7 years. That's basically just saying, their earnings might be relatively flat, but their payout might increase. I don't see anything wrong with that. As for revenue growth and earnings per share or PE, terminal PE, I might just assume no growth business. Deserves a 10 price to earnings and price to free cash flow, 15 on the discount rate side. As for margins, average about 2.5 and then 4. Maybe I'll do 3 and 4 because I'm not going to hinder their margins too much because again didn't have too much debt. So depending on just how the business is, I'll just average out what it's done the last couple of years. And then share change, they've bought back an immense amount recently, but haven't historically bought back too many shares. It looks like, yeah, no share buybacks outside of really the most recent year. So maybe I'll just assume 1%. Um, and that has us still quite a bit off from where we'd want to get it. Looks like it has to fall about 60%. But again, the whole purpose of this screener is to get companies that have a good dividend yield, and I definitely think this should be one that goes in your list if you're into dividend type stocks, getting that excess cash flow on the side. If you're retired and are living off it, whatever the case may be, I think this is one that we wait on, but is one that I'm very confident that the dividend can last and can hold, given their payout ratio is so low and they have very little debt on hand. So to me, I'm just waiting, but definitely want to be interested in for a dividend portfolio. Thank you and have a good rest of your day.